Hello guys and welcome to a new deep value video. Today we're going to deep dive into the financials of NVIDIA Corporation, ticker symbol NVIDIA, NVDA. NVIDIA is a company operating in the tech industry, and as of the 28th of August 2024, its stock price stands at $128 and has a market cap of 3.1 trillion. Moving on to some key valuation metrics, the company's price to earnings ratio is 70.2, while its price to cash flow ratio is 76.6. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 457.9%, while its bottom line has increased by an astonishing 964.3%. In terms of earnings per share, there has been a growth of 1,000%. However, it's also important to know the change in the number of common shares outstanding, which stands at 24.67, reflecting a 0.2% drop. Additionally, the interest coverage ratio is 187, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 2.92, which is very good. Looking at the long-term debt to equity ratio, found at 0.17, and the overall debt to equity ratio, or the overall liabilities to equity ratio, at 0.56. Now, so let's transition to the cash flow statement. Cash from operations is 28 billion, reflecting a change over the past 5 years of 490%. Meanwhile, cash from investing activities is minus 10.56 billion, showing a change of minus 158.1%. Furthermore, cash from financing activities is minus 13.6 billion, showing a change of 1,621.3% over the same period. Lastly, free cash flow has grown by 503.2% during the same time, from 4.27 billion to 35.77 billion, and is projected to grow to 91 billion in fiscal year 2026. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The ROE is 148.8%. The ROI is 102.2%. The ROA is 55.66%. And the ROIC is 65.26%, which is absurd. I mean, having a ROIC of 65.36% means that the company is in the top, I don't know, 0.01% of all companies in terms of capital allocation efficiency. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis by using a discount rate of 10%, a revenue growth rate of 35% for 10 years, and a perpetuity growth rate of 3.5%. You get a fair value of $45.57. Secondly, using a multiple valuation of 20 times trailing 12 months price to earnings, operating cash flow 25 times trailing 12 months free cash flow, you get a fair value of $42.25. Finally, the average price target is $149.74. Putting it all together, we get an intrinsic value of $72.52, and using a 15% margin of safety, we get an acceptable buy price of $61.65, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate NVIDIA as a hold and as a sell at about 145 to 150. Personally, I think that although NVIDIA's numbers are astonishing and it's almost absurd how much of a money printer they are their stock is just very, very pricey at the moment. I would personally buy in, uh, if I could, I'd buy in at 65 to $70 so that I'd have a lot of upside. Thank you for watching. If you found this video helpful, please like and subscribe for more deep analysis. See you in the next video. Bye.